If you thought the 41-day government shutdown back in October was bad, you haven't seen anything yet. It is Monday, January 26. While the mainstream media is distracting you with the Minneapolis incident and the political theater surrounding the ICE agents, the financial tectonic plates have just shifted violently beneath our feet. Gold has officially shattered the $5,000 barrier, trading at $5,087 as of 6:30 a.m. Eastern Standard Time. Silver has gone parabolic. It is currently trading at $108.74, up nearly 7% in a single session. But here is the thing that nobody on CNBC is telling you. This Friday, January 30th, isn't just another shutdown deadline, it is the start of a double-dip crisis. We are staring down the barrel of a second government shutdown in less than 4 months, but this time it is colliding with a 100% tariff threat on our largest trading partner, Canada. Wall Street is quietly pricing in something called the liquidity freeze. If you hold dollars, you are losing purchasing power by the second. If you hold metals, you are watching the trade of a lifetime unfold. In the next 25 minutes, I'm going to show you the data that proves why this Friday might be the day the US dollar loses its status as the global safety valve, and why silver at $108 might actually be cheap. Let's dive in. Let's cut through the noise. Why are we here again? We just went through a record-breaking 41-day shutdown in October and November of 2025 that cost the economy an estimated $14 billion permanently. It delayed the jobs reports. It blinded the Federal Reserve. We were supposed to be safe until September. So why is the government threatening to close this Friday, January 30th? 2 words: Minneapolis incident. The shooting in Minneapolis involving ICE agents has become the single biggest political wedge of 2026. Over the weekend, the fragile deal to fund the Department of Homeland Security, DHS, collapsed. Democrats have drawn a red line. They will block any funding bill that includes the standard ICE allocations unless there are new oversight clauses. Republicans have drawn their own line. No bill passes without full DHS funding. This is not a negotiation. It is a standoff. Prediction markets like Polymarket just flipped. They are now showing a 75% chance of a shutdown this Friday. In October, businesses had cash reserves. They weathered the 41-day storm. Today, after a brutal Q4 and a slow holiday season, those reserves are gone. If the government shuts down on Friday, we aren't looking at a pause. We're looking at a cascade of defaults in the government contractor sector within 14 days. And the market knows it. That is why gold is at $5,087. It's not speculation, it's protection. If a shutdown was the only problem, gold might be at $4,800. The reason we are at $5,087 is because of what former president and current political heavyweight Donald Trump said 24 hours ago. He threatened a 100% tariff on Canada. Why? Because of allegations that Canada is allowing Chinese goods to bypass U.S. tariffs via a backdoor trade deal. Now pause. Think about what Canada exports to the U.S. It's not just timber and oil. Canada is a top supplier of silver, gold, uranium, and potash. If you slap a 100% tariff on Canadian imports, you effectively sever the North American supply chain for precious metals. This is why silver is exploding today. The market is panicking that Canadian silver will be locked out of the U.S. market, or that Canada will retaliate by banning exports of critical minerals to the U.S. We are already seeing premiums on physical silver eagles jump to 45% over spot this morning. Why? Because dealers know that if the border gets thick on Friday, hitting physical metal is going to be impossible. And it gets worse. On February 1st, this coming Sunday, new tariffs on 8 European NATO nations are set to kick in regarding the Greenland dispute. So, look at the calendar. Friday, Jan 30, government shuts down, domestic paralysis. Sunday, Feb 1, global trade war escalates, international isolation. This is the perfect storm. The U.S. government stops paying its bills on Friday and stops accepting goods on Sunday. Let's look at the silver chart because this is where the real money is moving. As of this morning, silver is trading at $108.74. Just a week ago, we were celebrating $100. We are up 8.7% in the last 48 hours. Why? This isn't just inflation. This is a cornering event. With the threat of the Canadian supply cut off, industrial users, solar, EV, electronics, are panic buying forward contracts. They aren't buying for delivery next month, they are buying for delivery now. Look at the COMEX inventory levels. Registered silver, the metal actually available for delivery, has dropped to a 10-year low. If the industrial users stand for delivery in February because they are scared of the Canadian tariffs, there is literally not enough silver in the COMEX vaults to pay them out. That triggers a force majeure. If that happens, the price doesn't go to $115. It gaps to $150 overnight. This is what happened to nickel on the LME a few years ago. The exchange had to close. We are seeing the early signs of a broken market in silver. I want to show you a pattern that Wall Street algorithms are trading right now. They are comparing this week to late 2018. In 2018, we had a 35-day shutdown. Gold rallied, but slowly. But look at the difference in debt. In 2018, U.S. debt was $21 trillion. Today, in Jan 2026, we are pushing $38 trillion. When you shut down a government that is $38 trillion in debt, the credit rating agencies get nervous. Moody's and S&P have already warned that another governance failure, a shutdown, could lead to a downgrade of U.S. debt. If U.S. debt gets downgraded next week during the shutdown, many pension funds are mandated to hold only AAA assets. If Treasury bonds lose that rating, trillions of dollars have to move. Where do they go? They can't go to Euro bonds. Europe is in a trade war. They can't go to yuan. China is the enemy. They go to gold. This is why we are seeing a $5,000 floor on gold. It's not a bubble. It's a repricing of the risk of holding U.S. dollars. So, what do? We have 5 days until the Friday deadline. Here is the scenario nobody is discussing: the forever shutdown. Because of the toxicity of the Minneapolis incident, there is a real chance that neither side blinks. We could be looking at a shutdown that lasts through February. If that happens, combined with Canadian tariffs, we will see supply shortages in the U.S. economy within weeks. My actionable advice: watch the $115 level on silver. If we break that, the shorts are dead and we go vertical. Keep an eye on the Canadian response. If Trudeau announces retaliatory export bans on minerals, the game changes instantly. Do not panic, sell volatility. We might see a dip if a fake deal is announced, but unless the underlying issues, debt plus tariffs, are solved, the trend is up. The world is watching Washington this week, but you should be watching the vaults. Because while the politicians argue over pennies, the dollar is burning. I'll be live streaming the Senate vote on Thursday night. Make sure you are subscribed. History is being written this week. Don't just watch it, understand it.